Hello, I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to this webinar, Solid Foundations Essentials for SME Success. If you have any questions on any matters that I discuss in this webinar, and you're watching it live, please click on the chat. But if you're watching it on the custom feed to social media, you'll have to send me an email, please, peter@essbiztools.com.au. Creating foundations are very important for businesses to be able to offer an outstanding range of services. We need this solid foundation. So there's 4 stages of businesses. Systemization that's very important. Survival. This is where there's bottlenecks occurring because nothing's been sorted out. There's no systems. It's not a great state to remain in. It's not very conducive for long-term success. Stationary is where we're really going nowhere. Your client's not moving one way or the other. It's important to document the key systems that are applicable. Scalable, organized systems for all business departments. But don't stop there. Some businesses get to this stage, they get things organized, but they really don't go any further. And then saleable. Begin to optimize your performance. Be deliberate and strategic in the work you do. So these are the words of advice you should be giving to your clients to encourage them to work with you on the development of systems so that you can create great outcomes. So what stage are your clients at in terms of systemization within their business? Their intellectual property, is it documented? Or is everything going out in people's heads and going home every night? And people can have accidents. They can decide to change their careers. And there's a whole range of the intellectual property of the business in their heads. Is the business super dependent on a few key team members? Are the team making it up as they go? I've seen that a few times. And have processes been documented into systems so that everyone working in the organisation knows what the next step is? And does anyone follow the systems in any case? Systemization is vital for successful business operations because if there's systems, there's a chance that other people will be able to follow. So we're going to be talking today about practical business plans, financial forecasts, budgets for all operations, key drivers, cash flow forecasts, projected balance sheet, daily reports, weekly performance and profitability reports, very important, monthly financial accounts, high impact key performance indicators, indicators that really mean something that you should be communicating to the leadership team of the client's business about, a rhythm of structured meetings, fundamental in many big companies, but not so obvious in a lot of small companies. And that might be one of the reasons why the failure rate in small business is at record levels this year. Data systems, inventory systems, maintaining adequate capital. And your clients need business systems in place for all of these. So let's go to practical business planning. I don't agree with the concept that you get appointed to prepare a business plan and you go off and write a business plan and take it back to the client. That is not a practical business plan and will not help them because there will be no ownership in that plan by the leadership team. You need to work with the leadership team. You need to guide them, give them information, give them some dot points, questions, but you need to have their involvement. Encourage ownership of the plan. There should be a monthly review of the implementation. It's not a document that gets thrown in the bottom drawer and then forgotten about. In this sense, it's got to be a living document, something that's continually referred to and analysed. And it needs to outline the goals, the strategies, the financial projections, and the operation priorities as to where you want this business to go. So the next concept then is financial forecasting. Yes, we need a system for it also, because this is the financial interpretation of the business plan. In actual practice over the years, I've seen businesses that have prepared a financial forecast, budgets, cash flows, etc., and then do the business plan later. I don't think that's the way it should be done. The business plan's the key document, and then out of it, we need to have the financial interpretation of the business plan. And the detailed projections need to align with the directors' and management's expectations. After all, they're summarised in the business plan. As part of this financial forecasting, we have this concept of key drivers. What are they? They're sub-accounts that in some cases get hidden in the budgetary and cash flow forecasts. They're not highlighted. They need to be highlighted so that you have got them to relate to each month. Inventory. What was the estimated investment in inventory at the end of the previous month? And what is it actually? Why was there a variance? Now, the variance could have been caused because of production delays. It could have been caused because of receipt of stock, especially from overseas, has been delayed because of the wars in Europe and the Middle East, and ships are delayed some of their voyages or going a longer way around the globe. Debtors. This enables you to be clearly evaluating debtors' days outstanding figures. Work in progress. Is it dormant, or is work still going through and progress claim invoices are being raised continually? Capital expenditure program should be outlined so that people have an understanding, so that it's been covered within the cash flow. Research and development. If the business is a company and undertaking research and development, it needs to be documented so that there's an appreciation of the amount of money that needs to be provided for this activity within the cash flow forecast. Because remember, a company has to spend the money for research and development, in effect, a financial year in advance before the benefits are received. And if the company's trading at a profit, the benefit is a tax rebate, but that also takes time to flow through in a cash flow sense into the business. If the company happens to be trading at a loss and the turnover is under $20 million, the research and development tax offset amount that's been calculated can be claimed in the company's income tax return as a cash refund, and the tax office will pay that amount into the company's bank account within 30 days of the tax return being lodged, as long as all the information is included in that return. What's the plan on dividends? And that needs to be factored into the cash flow forecast. So the whole idea of the key drivers is to be able to ensure that there are, in effect, sub-accounts prepared on each of these items that are able to be reconciled with the actual amounts as shown in the balance sheet at the end of the month. Create cash flow forecasts. It covers all these types of things. The payments being made, the debt's been paid, loan repayments being made, all need to be going through the cash flow forecast. And let's have a look at the cash flow. It's the business's lifeline, isn't it? There's plenty of examples where businesses have been trading profitably according to the profit and loss account, but get into real financial difficulties because they lose control of the cash flow. They have too much money owed to them by debtors. They've overinvested in inventory. They've overspent on capital expenditure, just business expansion in general. So we need to make sure that as accountants that are advising SMEs, you need to be very conscious of using the cash flow forecasts to predict when there is going to be cash flow difficulties in the future. That might be, and hopefully it is, 8, 9, 10 months in advance, so that there's time to organise some relief. We need to plan for seasonal fluctuations. If your client's in retail, they will want to build up prior to Christmas and perhaps other key times during the year, Easter or other festival times. You need to be aware of where the key components are coming from. That's what I mentioned before. If raw material or finished stock is coming from overseas, what's the effect on the cash flow because of the inventories that need to be held? If you find that your client wants to hold more in the inventories in Australia to cover delays with shipping coming from overseas for their raw materials or even their finished stock, you need to be conscious that that's going to affect the cash flow. And some planning needs to be done to overcome that problem. And this whole cash flow story needs to be reviewed each month. Not in a 2-minute exercise either. Needs to be looked at. The balance sheet is your insight into the future. It's an important document. It's not just proving that everything balances, of course. It enables you to be the storyteller. I think this is very important for accountants, to give you the confidence to be able to talk to the leadership team of your client's business. This is what your position will look like in 2, 3, 4 years' time, as long as the following are achieved. These are the items that you've agreed to in the business planning process. We've now reflected it in these financial forecasts. So discuss with the leadership team whether they're happy with what the business is going to look like as per the projected balance sheet in that future date, 2, 3, 4 years' time. And it's very important that valuations are prepared to give the leadership team some confidence that the decisions they're making, and when you project it into the future, they can be able to see the benefits that are now going to be reflected in the valuation of the business. So daily reporting. Now we're now going into this rhythm of meetings. Very important. Daily report is a simple report that's distributed to the leadership team. It might only be 1 page. It is basically going to cover the cash at bank, the debtors amounts confidently expected this week, the creditors to be paid this week. Might set off some alarm bells that, gee, we need to pay out more than what we've got. It is sending a very polite message to the leadership team to make sure that they pick up that list of debtors that they were supposed to contact 2 weeks ago and go and visit them or contact them and make sure they get that payment from them so that the business can pay its debts. Now let's look at the weekly performance and profitability report. This is an important document. It's a document that's widely used in big businesses. Unfortunately, not so much in small businesses. I suspect this is one of the reasons for the failure rate in small business. Let's go through and look at it. Why? Prepare for each business operation. If your client's got 5 or 6 different businesses, split them up into separate businesses. That's how the budget should have been done. That's how the monthly financial account should be prepared in the profit and loss account. And most definitely the weekly performance and profitability report needs to be prepared for each individual business so that you can compare it to the budget expectation and immediately identify variations from what was projected to happen. For argument's sake, if the expectation was that there was going to be a 38% gross profit percentage this week and we've only achieved 22%, why? Because if you were the accountant in a larger organisation, this is what you would encounter. Finding out why, identifying the reason, and then reporting that to the local manager to investigate. Now, we're talking about small business, so this is all going to be done within the confines of an SME. But by highlighting what went wrong, your client has got the opportunity to fix it within a couple of days of that problem occurring. Now, it might have been human error. It might have been fraud. It might have been complete misinterpretation of some other instruction. It might have been that the stock take wasn't prepared properly or valued properly. There could be any one of a number of reasons, but in some cases it could be a problem that could continue week after week for the whole financial year. Because how many of your clients know each week what their gross profit percentage has been? How many of them know it on individual departments? Now, if they're IGA stores, I know many of them do, and most definitely so do Woolworths and Coles. And this is who a lot of your clients are directly or indirectly competing with. The big stores have got meat distribution businesses, butcher shops, small goods, and so many of your clients got these sorts of businesses. The larger stores know what their performance was in those stores each week. Does your client know? Or do they just know a turnover figure? It's not enough. They need to have the overall information so that the leadership team can sit back and look at it and understand what's happening. This is a major difference between SMEs and larger businesses that needs to be really investigated and changes made in the system. I know a lot about this because for 12 years of my career, I was the chief financial officer and company secretary of a publicly listed company. And this was the system that I went into, and I made some changes to it over the years, but it's a great system because every activity was being closely examined every week and problems were being detected and fixed. If not, they would have stayed in the system. Your clients are running that same risk. Monthly financial accounts, they're still important, very important. It should be prepared for each business operation, compared to the budget, but then calculate the key performance indicators and business metrics. This is one of the other big variations between successful larger companies and successful SMEs that are scaling up. They know their key performance indicators and business metrics. They're looking at them daily, weekly, monthly. Are your clients doing that? This is the system that I'm urging you to install for your clients and then make sure that information is being produced each time. The next big issue that really needs systems is debtors. Australian SMEs management of debtors is woeful on the whole. Debtors days outstanding a few years ago was the highest in the world, and I haven't seen anything since that has indicated that that unfortunate recognition of Australia has changed. So the debtors days outstanding was one of those key indicators that I talked about earlier, needs to be monitored at the very least monthly. But there needs to be an awareness weekly in the special meetings that are being held, daily, weekly, monthly meetings. Is everyone collecting their debtors? And there needs to be an awareness of the personal property securities register. When we're talking about debtors, should that customer have been registered on the personal property securities register? And within ESS BIZTOOls, of course, we have full product packages on each of these items that I'm mentioning in this presentation to help you and your team understand this process. So let's now move to inventory. Obviously, businesses have raw material inventory. They've got completed stock inventory. They might have spare parts inventory. It is all money that's tied up. It needs to be accounted for properly. And the investment compared back to the budget estimates, to those figures that are contained in the balance sheet. And that's why I'm really suggesting that these items are not hidden in the budget process. They're clearly identified as key items. And what external factors are influencing inventory levels? I've already mentioned those, shipping, but there could be others. Now, the meeting rhythm is important for businesses. It's important for the leadership team. It's also important for each activity within the business. But I'm mainly making these comments on looking at the leadership team and how you are going to interact with them. Daily, weekly, monthly. Daily, weekly, monthly. I've discussed the daily exercise. The weekly is basically reviewing the weekly performance and profitability reports, analysing what went wrong. That's one of the key roles of management, I think. The plan where the business is going to run, this is their contribution to the business plan, reviewing of the predictive accounting reports, the budgets, the cash flows, projected balance sheets, and then monitoring actual performance to make sure that any deviations are investigated and fixed. But to do that, they need an accounting input to highlight to them that there were deviations. Because otherwise, SME management really doesn't get that information. They haven't got an accountant working for them. No one's analysing it. They see the turnover, they know the wages, but bringing it together is important, and then having the confidence to be able to discuss it with them, to argue the point that there is a problem that needs to be fixed. I'm not saying that the accountants need to fix the problems, but your role is to identify that the problem occurred and then identify the reasons that you believe has caused it. But it's up to the management people to sort that out because they understand the business. And the monthly financial accounts, reviewing them and making recommendations through to the board of directors if that's how the business is operating. Key performance indicators and business metrics. And one of the other big variations between SMEs and larger companies. They're monitored in larger companies. People are looking at them and analysing the flow. It's pretty easy when you look at a spreadsheet that's got KPIs on it to pick a variation. That stands out quite easily. And then investigate that. Why did that occur? In some cases, it might be a benefit. But if it occurred in 1 week, why can't we get it every week? Should be the action. So it's very important, daily, weekly, monthly. And alert management where there's been variations. And I found over the years that you really need to alert management. It's not just put it on the document with a whole stack of other figures and expect them to react. Managers are busy people. They're looking at all sorts of things. They need to have it pointed out and say, hey, do you notice that? So get your red pen and mark it. When you leave it on if you're going to leave it on their table, give them a phone call later on and say, Jim, did you read what I left on your table? You've got a big problem there. The margins have varied significantly from the norm and the expectations. And hopefully they will be able to fix it. Now let's get to the capital strategy and development. What's your system for this? We're just going to sit back and wait till we run out of money? Or is there strategies? So what's the short-term funding options? Is there money in the system that will cover that? And what's the long-term funding options for this business? Now, bear in mind in looking at these short-term and long-term options, things like the inventory, debtors, creditors, capital expenditure, research and development, all have an influence on what is happening and the productivity of the organisation, especially if you're employing people to undertake tasks as a tradie type business where the real investment is in the team members and it is their productivity at an appropriate charge out rate that has been set so that it will earn the targeted profit for the business. That's important and it needs to be monitored. We just don't set these things up and say, well, that's it for a year. We'll have a look at the end of the year and see how we went. We need to be helping our clients to manage these things daily and weekly and then monthly. So where is your client potentially going to get some funds? Well, there are some government grants to help them on a particular project that they can look at. It might be their own funds. They've got additional money they can bring into the business. They may need to be alerted that this might occur 3 or 4 months' time because they may have to sell a building. They might have to go up and mortgage the building to get that money, whatever they've got to do. They may have to have a discussion within their family to get an agreement that they're going to contribute more money into the business. What borrowings could they make? Have they got assets that they can offer as security? Some of the new banks, and there's over 100 of them, 120 of them, I think, in Australia, the new one, are not so concerned about getting security, I've noticed. But I think there's an upper limit to how much they are able to lend on that basis. And they really want to find a strong business. They want to look at the bank statements for the last year or so, and they need to understand the reputation of the business before they lend money. But this is all part of your system for how we're going to fund this business, the capital side of it. Or is the prospect of raising capital from the public? Does your client understand how crowdsourced funding equity raising works? Do they meet the parameters? Turnover under $25 million. Gross value of assets on a worldwide basis under $25 million. Not listed on a stock exchange anywhere. Well, if you tick all those boxes, you're getting there. And the money has to be spent in investments in the business. It's the government's concept is it doesn't just sit in the bank account. It needs to be used. And then your client needs to understand how crowdsourced funding works. Well, we've got full details in our product packages to help you sit down and have that conversation with your client. Do they want to do it? Then you can start the introduction to the who the people who have got the licenses to be the crowdsourced funding intermediaries, and we've got full details on that also. And then you need to introduce your client to a number of those intermediaries, to have a discussion with them, to find out who they feel comfortable with, because this is a very important appointment. This organisation is going to be entrusted with raising the capital that your clients decided to seek. And they've also wear another hat. They're going to approve the amount that you're applying for and approve that the overall application from your client has been acceptable as a crowdsourced funding equity raising company. And if you're dealing with a young company, not executives or directors, but young in age of the company, and they've been involved in research and development or innovative type activities, they may be eligible to apply for the status of an early stage innovation company. And you might be sitting back and saying, yeah, well, why is that important? Well, it's very important because the federal government are very generous when it comes to a company that meets that status, because they offer an inducement to the investors. Come and invest in this nice little company that's undertaking research or development or developing innovative technologies, and the government will give a incentive payment to that investor. As far as I know, it's the only type one instance like this in Australia. And that incentive can be quite substantial. If you're dealing with a sophisticated investor, 20% of their investment can be created as a tax credit, up to an amount of $200,000. If they're a retail investor, they can get up to $10,000 as a taxation credit. But there's the opportunity to avoid paying any capital gains tax for both groups, sophisticated and retail investors. If they hold those shares for longer than 12 months and less than 10 years, they don't have to pay any capital gains tax. That's worth talking about, isn't it? And you need a system. It's important that all SMEs maintain a funding ready position. And this basically means that their financial accounts are up to date. They know their valuation because that's been updated. They're getting information each week that we're talking about. Hopefully they've got a board of advice at the very least in operation, preferably a proper board of directors. And they've got their systemization is documented. Their pitch decks prepared, so within, say, a day's notice, they're able to do an investment presentation to a business angel group or to someone else that walks in and knocks on the door and says, I've been watching you, I've been looking at your website, I'm listening to what's going on in the marketplace. You wouldn't be looking for an investor, would you? And you are able to make a presentation to them where your client is. And the CEO and the other members of the leadership team need to be familiar with the investment presentation. This is part of the system, that they've been updated, maybe updated every 3 months. This is our current position. This is where we're going. This is how we're performing. So that if you are talking to people who are interested in doing joint ventures or even investing in the business, you're able to communicate with them. So systemization is holding all this together. It's what really creates outstanding businesses. So the implementation of these characteristics of a well-organized business requires a strong emphasis on developing systems for the components mentioned in this presentation. And there's many others also. These services go beyond compliance. The compliance side of the work was finished long ago. But does that set of financial accounts help your clients run their business? Does that set of financial accounts that you're prepared as part of compliance for the annual set of accounts, does that help raise funds for the business? Because I've observed that many of those accounts have got no key performance indicators, no business metrics, no comparisons to what was originally planned in the business plan. They're not documents that can be used. They position accountants and bookkeepers as a key player in your client's success story. What we've been talking about today. You are a key player because 99% of your clients can't do the work that we're referring to. A lot of cases, they haven't got the time. They're preoccupied. They go home at night and their brains just got to sit down and relax, watch some TV, not worry about the business. It's your role to help them, but you need to be vocal. You need to raise the issues. You need to look the client in the eye. You need to be taking some responsibility for all this. So assisting your client in this manner can create rewarding long-term relationships. Many of your clients will not raise enough money if they're going down the capital raising path to employ a full-time chief financial officer. But they might be very happy to engage your services for a few hours each week or a day a week to make sure all of this information flows. So you can turn compliance into capital advisory. I imagine you're still going to be doing the compliance work, but it should be a byproduct at the end of the year, not the total emphasis on that tax return. It needs to be that we need to make sure our clients surviving and creating the right type of business results first, and then the tax return. This positions the accountants and bookkeepers as the key players in your client's success story. You really become the storytellers. You assist your clients in this manner, can create the long-term results. Sorry, I repeated that slide. Growth and innovation is very important, and it's an opportunity for you to guide your SME clients through this journey. Your value skyrockets in the market for your key clients because of the services you're providing, the systemization that you have helped introduce. ESS BIZTOOLS can assist you. We've been developing this material for over 20 years and it's been used by accountancy firms all over Australia. It's very different to what we had 20 years ago. We've continued to evolve. We've tried to move with the times. We deliver it via the internet. We can assist you in the development of the systemization to create this unique level of services for your clients. We've included all this within the ESS BIZTOOLS product packages. So please visit our website, www.essbiztools.com.au. The ESS BIZTOOLS financial forecasting product package will assist you to implement these services as I've discussed them in this presentation, so that you can be a star helping your clients achieve their business objectives. I hope you want to know a bit more. I can't have answered all of your questions in this time. So please contact us, send me an email, peter@essbiztools.com.au, and I will get back to you. And we could possibly have a Zoom meeting as part of the follow-on. 30 to 40 minutes, take you through various aspects, show you how I think ESS BizTools could help your team to really perform in this area. And this will help you in the all-important talent attraction and retention that accounting firms all over Australia are telling me that you're having problems with. I think your team members will be delighted with the variety of work that this type of advisory services delivers them, and the development of systems for your clients, because they'll be having an input in that. Or you can telephone me if you wish, 0418 190181. Have a great day, and thank you for being with us today on this webinar. Goodbye. And I look forward to hearing from you. Goodbye.